The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more, into the breach, dear friends. And as always,
the following takes place between 2 p.m. and 3 p.m.
pretty much every day, every trading day. What do we got going on out here? And I think we've got just the tad end of options going delta neutral. They started early on Tuesday, continued all the way through yesterday. I think we probably have it completed through now. And what does it kind of show? Kind of shows that we've got a S&P that wants to expire right around the level that we're at right now, which is about 2065. What they do show, though, is a huge problem in the NASDAQ, and that is that we could go down fairly far in the NASDAQ between now and a week from Friday. That is the 20th. So we continue to kind of take a look at that. But to me, it looks like they're digging in, at least on the S&P, like an Alabama tick. If you've ever tried to get one of those off a dog, it's everything you can believe and more. Anyway, trying to collapse a volatility in this market. We got down to 2053 on the low in the cash for the S&P today. Volume is okay, but not great, 2.35 billion shares. A little more tepid than yesterday and the day before. It looks to me as if we continue to see pressure from a variety of sources. But my call is the Fed and the Treasury are doing everything they can to stop this market moving one way or the other. I think they want it off the table for the election cycle. And they'll juice it anytime they can see the market's acting a little weak. They will rain all over it anytime it looks a little bit strong. And they're doing that through the manipulation of the dollar. My guess, though, is they are only kicking the can down the road, letting steam build, and there will be an event where this thing breaks fairly wide open. I continue to think that we will see action in individual stocks. We'll talk about that throughout the show today. But short of being short tech and, of course, maybe selling spreads and going long some stocks that may have some short squeezes, it is very tough for me to see that there is a lot of money to be made playing indexes. I think maybe if you wanted to be playing indexes, it wouldn't be the S&P. Certainly would be the NASDAQ over the two of them. And, we went through options this morning in the path of least resistance. But they continue to show that there could be a great deal of weakness in the NASDAQ for at least through expiration, and that they're locking the S&P up as much as they can so it goes nowhere fast. As Talking Heads song once said, we are on the road to nowhere. But that just starts off the show. We've got to get this party started.
And it's all just a little bit of history repeating.
And that is very interesting. People don't know Alabama ticks with a T, T-I-C-K. If they get on your dog, you can't hardly blow them off with dynamite. But I shall continue. On this day in 1949, the end of the first Cold War crisis comes to an end when the Soviet Union lifts its 11-month blockade against West Berlin. The blockade had been broken by a massive U.S.-British airlift of vital supplies to West Berlin's 2 million citizens. As a son of a Air Force, well, I guess at that time, captain. At that time, my father, a U.S. Air Force captain, was busy flying anything that they could find back and forth, and at the same time doing some missions, flying in and through Russia, he told me, after, I don't know, that'd be 1980s. So many years after that, his job was to fly CIA guys in the back of the plane and spot where their radar was. But at the same time, he would be doing a double duty by flying all kinds of stuff in. And he was one of those guys that threw candy bars with little parachutes on it out the window to the Germans that they'd been fighting just 3 or 4 years earlier. He, of course, became an Air Force officer in 1946 and missed all the exciting stuff because, of course, he was born a little too late. But very interesting thing. They ended up flying almost, a little over 2.3 million tons of supplies through that year. Mostly it was coal because, of course, communists and socialists are just wonderful folk. But on this day in 1949, it came to a screeching halt, was one of the first losses for the commies. But at one point, there was a plane landing every single minute, and that happened for almost 1 month at a time, so at its height. But most of what they flew in was coal to keep people warm during the winter. But what else? If you missed any of the action in Europe, I think a little bit of the S&P movement today had to do with Europe's insurer. If you're unfamiliar with this company, do I have it here? Yeah, it's Aegon. But almost all of the insurers except one had a bad hair day in Europe. The reason why, they are absolutely getting creamed by the negative interest rates. If they come to our shore, just be forewarned, put it in your quiver back there. It's one of your arrows to know just how bad the insurers get slammed on this. I guess the thought would be if we go to negative interest rates, since things look like they're going into crapper, and maybe that is the last bastion for people that will not see the light, i.e. allow market conditions to rule, that maybe AIG or other insurers here in the United States would be your first pick for shorting. But these stocks have had some bad times, and basically the earnings reports from all these insurers over there tell you that they are probably the most affected by negative interest rates. So think about that as time goes on. We have been mauled. Of course, everybody's been talking about how bad retail has been the last few days. We talked about it after Gap came out with their earnings. It didn't look very good. It's gone from bad to worse, but we have some comments from somebody that's actually an analyst in this sector, at least in the malls. We'll talk about that when we come back. Give me a call, 877-927-6648. Email me at path@tfnn.com or post a message in the thing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, there was an article out from Jan Niffen anyway. On an apples-to-apples basis, we have twice as much per capita retail space as any other country in the world. The UK is second. They're half of what we are, though. So we are the most overstored place in the world. There was some nice charts and graphs and other stuff, but I think that's got to just tell you everything you need to know, isn't it? We have far too much supply as far as retail office space, and Amazon basically kicking the rear end of those people that are left. I continue to go by malls down here in Florida. I know it's anecdotal, but still a lot of malls still closed, strip malls mostly, and traffic continues to be very light. We talked about that, I think, on Monday, even before, or maybe it was last week, before the Gap earnings. And nothing looked to me, at least anecdotally, like it was getting any better. But if you want to get scared, be along mall real estate space and be in these B tiers. He thought that about 1/3 of the American malls would be out of business after next Christmas, which I thought was very telling. And, of course, great deal about Macy's, and that he thought, although I don't know if you can put a great deal in it, thought that of Macy's 800 stores, 500 of them are making money, 300 of them are losing money, and he thought that there was a good chance that a high percentage of them, somewhere around 200 to maybe 250 of them, may be closed after this Christmas. A anchor store like Macy's pretty much makes a mall. Once those stores leave, JCPenney, Sears, Macy's, others like that, the malls tend to go to the elephant graveyard to die. Unfortunately, they're still there sucking up huge amounts of space that seems to take years for the bankruptcy to settle out. And by then, the place looks pretty horrible, and you may be seeing very scary movies filmed in them. Seems like a favorite spot for movies because they can rent them very cheaply. And, of course, my favorite movie of all time, Chopping Mall, C-H-O-P-P, Chopping, I-N-G, Mall. Other things going on, the Love Shack. We're going to find out if there is any love for the Shack tonight with, of course, the burger chain reporting after the news, after the bell tonight. Didn't see a great deal about what's in there. Of course, this thing was, what, $90 or something? Now, what, a third of that or something? Doesn't seem like there's a lot to hang your hat on it. I always thought that there were probably 2 times as many extremely high dollar burger chains available. Never really understood this. I think it's more of a big city thing, probably not the urban sprawl of Pinellas and Hillsborough County down here around Tampa. But if I'm going to spend that money, I'm going to go get a nice filet or something else. I don't think I'm going to spend $15 on a burger and a shake when I can go to a Longhorn and get a very nice steak for that cash. I just don't understand it. But again, I'm not that kind of consumer. But after the bell tonight, you know, even at a third of the price that this thing used to be, this was one of the prime examples of a sliver deal. That is, that they come out and basically print huge amounts of shares. They have the IPO, but guess what? They only put out a very small amount of the shares in the float. And as the price goes up, especially when there are a lot of people short, those shares come out of the closet and pretty much make it an easy ride for companies like the Shack to put out a lot more cash. And it is a stunt. But, you know, there are a lot of failed IPOs. I don't know if this has failed yet, but I think it is very close. If they have a bad earnings cycle tonight, there is very little upside and a whole lot of downside in this. I don't know what I could say about it other than that. We talked about this probably 4 or 6 weeks ago, and that was the Brazilian president is excommunicated from the government. That is until after they have a trial. Right now, 3 of 4 elected officials in the national government are all under investigation. It is very rare to actually see anybody pay the price, although they were within a couple of votes of actually having the needed votes to toss her out permanently. Of course, if you know anything about it, she was a big communist and a rebel, one running around killing all manner of people in the 70s. And of course, everybody thinks that was cool. I know kind of that she's just one kind of evil. If you do not get the reference on the top of my slide, you need to read Animal Farm from George Orwell. Anyway, Brazilians have an expression, and it basically in English means it all ends in pizza. Well, the reason that it comes to that is, and it would mean more, it ends in nothing. But generally, everybody gets together that's involved in the cabal in Brazil, and they go and have pizza, sort it all out. Maybe someone has to pay the price. Maybe someone has to go to jail, and everybody else goes free. Best description would be it ends in zilch, zip, or nada. But it is an expression used about corruption trials and indictments of politicians where incredibly rare that any consequences for the guilty ever come to pass. But she's out for at least 6 months. Maybe she can go back to oiling up her AK-47 and terrorizing the natives down there as she did in the 70s. But probably a good thing. At least someone's going to pay at least a little bit for the huge amount of money. I think when we talked about this last month, there is one gentleman under investigation that was willing, and this was kind of a small fry, that was willing to give $100 million back. So the question is, what are these really big folks? How much did she run away with? $1 billion? $2 billion? Going to be very hard to find out. And of course, this all happens with the backdrop of the Olympics coming to town. And even then, you've got many of the pro soccer player, or as they like to say down there, football, saying that no one should show up because of all kinds of problems, including the Zika virus. Many of the top guys down there, I don't know who they are, but the top soccer players for the country say, stay home, do not risk your life. I can only wonder how well that's going to turn out. It's been a boondoggle already. We will be back and get into charts after this brief commercial timeout.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I had a question in the email yesterday, and the question was, how do these card skimmers work? How do people get into them? And if anybody's familiar with computers, they know that there's always like default accounts and default passwords. But how do these things work? Well, I think it was either CNN or somebody did a survey last year, and 90% of all those credit card machines that you see on the counter all use one of two passwords. And that's pretty much it. They don't make it very hard on the actual hacker if they want to get into those machines and figure out and get into the streams. But that's how easy it is for them to hack one of these things at a gas station when you use your credit card. But there it is. 166816 or Z66816 are the passwords for 90% of every one of those card readers. And seems rather almost silly to think that we have any real security out here. But that is the answer. They make it just too darn simple for people to hack these machines. Yesterday we talked about how things were going in Netflix, and I said last night I was Chelsea Handler, I was coming out with her new machines in FLX, and I thought probably it was going to be a stinker. I watched briefly and fast forwarded through both episodes of her new show. I guess the next one comes out after the maybe tonight. Anyway, she does 3 of them in a row. And I thought maybe she wasn't very funny, but all the people around her were on the show that she had on E! Well, we wanted to look at Netflix. Hang on a second. But Netflix pretty much taking it on the chin. I don't know if you can say everything had to do with that, but if I watched both of them, and I'm thinking as adjectives, Hindenburg, Titanic, it was particularly unfunny. A huge amount of what Netflix has been trying to do determines or is determined by them coming up with low-cost content. And watching it, I'm thinking that she alienated 75% of the people that watched her for the first time. People probably know who she is. Probably not a lot of surprise, but particularly unfunny would probably be a great description of her show for a stand-up comedian. Probably not real great. I think we had a lot of people diving on this after they saw the reviews last night, that at least this may be another Marco Polo for Netflix, and maybe even lose some subscribers over the adept way that she described her views of some folks that probably some people would like. There's a lot of stuff on Netflix, but I have a feeling that they thought this was going to be one of the ways that Netflix really differentiated itself from others. But I don't think that you get a lot of viewers by poking 3/4 of the audience in the eye with your thumb. And there's a very fine line in comedy between being funny and just being mean. And it looked to me like just being mean and nasty, which is doubly hard for a woman and easier to go off that line. But I don't think that there's anything there. I kind of look at it very much like I looked at CBS's attempt to bring on Stephen Colbert, which has been kind of a miserable failure in these, and kind of interesting to see. But also, of course, Netflix has been, or I mean, not Netflix, Amazon's been talking about coming on with their own system a little bit more, maybe spending a little bit more on content. As I've always said, this is kind of a horrible business because before you had to have a television station or you had to have a cabal all wrapped up with cable and make sure that you were on the approved list for cable companies. What really stops anybody else from doing exactly what Netflix is doing, especially when it comes to live programming? But I do digress. Let's take a look at some of the movers for today. We'll try to go through them as fast as possible. Again, you can email me. I've got a couple queued up already, but email me at path@tfnn.com or do that. Oh, I did have a clip of Chelsea from last night.
I'm not afraid to express my opinions, no matter how ill-informed they may be.
And they were. Arctic Cat, down, nice little clip down here. There is a little gap, but I don't think it's extremely meaningful. There continue to be a lot of high volume lows that are untested in this market. Arctic Cat, going into summer, don't know about that one. January 28th, $8.90, 1.7 million shares. These are all wrapped up in news and earnings and that kind of stuff. We were talking about Aegon, I think, or is it Egon or Aegon? Or egg on your face? I don't know. AEG is the symbol on there. This thing does trade with a ADR, and why it's always so gappy out here, of course. And when you look at this, down with some significant volume, but again, a lot of high volume lows that never got tested back in the depths of the pullback. AER, which is error cap, this one opened up, got some bad news, but heavy volume the way down today. As Tom likes to say, a lot of people, a lot of trading wiped out. And we look at this one, it's gone back to the 1st of March, where all this trading actually started. You can even say late February got wiped out kind of all in one day trade today and ate up all of those. But you can see distribution in very thin markets and untested lows. Again, you can always make money. The question is just if you're smart enough to get off before the music stops. February 9th, $24.61. Looks like a low that will get tested if you're watching on that. Gold, a little bit of a pullback in some of these. Not a big deal in Yamana today, but it's on the list of movers and shakers. Some other stocks out here that opened quite high only to be sold off, which makes me think a great deal about stamps.com on Monday because there are much more of these opening up in penny stocks and in big stocks. In fact, I think that there's one in here that we're going to get to that I think is incredibly dubious news that they're running the stock on. Harvard Apparatus Regenerative Technology. Never heard of this company. Probably won't hear about it again, but a big mover out here. CVO, which is a Cinevo, actually a gap up with some volume. Again, a penny stock out here. So we're not going to spend a lot of time on those. We're just going to go through them. Himax Technology. This is a company, if I am not mistaken. Oh, we're going to a break, but we'll read about what this company does, and just so I'm 100% accurate on the other side of the break. Hang on.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Anyway, Himax Technologies, just wanted to make sure that they were out of the memory business. They make imaging processing technologies, drivers for LCD screens, touch sensors, a lot of different stuff. But I knew that they were talking about getting out of memory. I wanted to go back and look and make sure that they truly were. And they are. They had a fire in one of their plants. And I kind of remember that was maybe the impotence because it was a memory factory to get out. But used to buy their memory, actually, in the olden days, before the earth cooled. Himax Technologies, high volume down on this day. And, of course, none of the semis, none of the technology stocks getting a great deal of love today. But certainly this one's down on volume. Went right back into what used to be the highs back on December 21st, 899 that had 4.2 million shares, spiked through that today with 12 million shares, but back above it. And he had 4.8 million shares on June 17th of 2015. So you're right back to what should be at least minimal support, but came down on massive volume. Jack in the Box, of course, with the Love Shack Hamburger Company coming out with earnings after the bell tonight. Jack in the Box had a ton of people that were very bearish on it. And one of the weird stuff, I'm kind of always, they call it hypervigilance. I see stuff, and it may be little stuff most people ignore, but it bothers me when I see it, and I just have to go find out about it. Today at lunch, I was driving by the McDonald's, and I saw a sign, and it said, $1 for an 8-pound bag of ice. And I thought, well, a pretty good price for a bag of ice. Normally it's, I don't know, $2.29, $2.50 down here. So not a bad deal. But why would McDonald's be getting into ice? And I thought about it a little bit, and especially I saw that sign today. Ask them, yeah, today was the first day. If anybody has seen them selling it before, let me know. But I always see something like that, and I go, why in the world would McDonald's get involved in selling ice bags? But it always is a always interesting. Anyway, Jack in the Box had a ton of short people all over this. They were pounding it yesterday, pre-earnings. And, of course, earnings actually fairly okay. Made some changes to their menu. Things are a little bit better. And this is kind of a have and have-nots. Certainly, the volume is not what the volume was on the 18th of February when this thing came down on 8.2 million shares. If you're lucky, that's what we're going to get today. It's come back and filled its gap, but this is where the road gets very hard sledding because you had a bunch of people from December 9th high all the way through the 17th of February when this thing blew apart. It's just coming back and filling its gap, but you can actually, or we can, actually look at the levels of shorting. And yesterday had some decent amount of people actually shorting this with high volume, pushing it down into earnings. And that's why it's so hard to hold any of these through earnings. Other stocks of interest, as we talked at the beginning of the show with retail, another kind of horrible day for retail stores with Kohl's out with numbers, and it gets the losing horn for the day. This thing has gapped through most of what anybody would think as support. If we go back, I don't know how far we have to go back for Kohl's to get into this range, but man, really the next level of supports are these $25 lows that go back to 2008. That's October 24th, 2008. I know I get a bunch of coupons from these guys all the time, 20% off, kind of like Best Buy or Bed Bath & Beyond. You always get the coupons. You don't want to buy anything there without them. But two high volume lows. And in fact, this one tested on November 21st, 2008 with a higher volume, the October 24th, 2008 low. And eventually these highs with high volume eventually work themselves back. And I will always have Tim Ord's voice ringing in my head saying a high volume low is not a high volume low until it's been tested on lighter volume. It is a unattested low, but not a low yet. Even if it takes years, these things seem to get retested. Down on, of course, 17 million shares today. And, you're into that kind of consolidation range this thing saw back in, 2008, 2009, pretty much through that March 2009 level where we finally saw the lows come back in. But that's pretty much what you're at in Kohl's. Let's look at some of these others. Again, you can give me a call at 877-927-6648 or send me a email. What do we have here? LNCO. Nothing much in that. See, take a look at a couple more out here. LSB, least significant bit industries. LSU. Now, this is kind of interesting. We'll look at this one just for the pattern. I kind of like this. The thing gapped down on monster volume back on the 6th of November of 2015. I'll call it 11 million shares. Got into it, 600,000 shares pull all the way back down to $7.73 on May 5th. It's gapped up today with some energy, 3.6 million shares. But again, we're going against that almost 11 million shares from the November the 6th. LSB Industries. If you're a programmer, you would know that that means least significant bit. That means that it's kind of like reading right to left and left to right. That just means the first bit is the small one, and the one on the right is the big one, opposite of what we see in decimals. Sells chemical products. Water sources has nothing to do with programming. Geothermal heat pumps, air handling products in the United States internationally, chemical business, and climate control business. Almost kind of a Reese's Pieces of companies. I don't know how those things, both of those things go together. Sounds like to me like a company that needs to be split apart, but who knows? Anyway, back up to its highs, but on much lighter volume. MIDD, the middle buy company. This one is another one that had a huge gap down and is coming back up to its gap down. We'll take a quick look at this one also. Gap down with a monster volume of 2 million, well, almost 3 million shares on the 11th of November. It's back up with 900,000 shares today into that gap. This company manufactures, markets, distributes, and services commercial food services, food processing, and residential kitchen equipment in the United States. We'll talk more about this when we come back. Warming, food equipment, restaurants, stores, conveyor belts, baking, roofing, decking, speed cooking.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I had a question on Quest Diagnostics. Energy's not all that bad coming back up off the lows. But I think you probably have huge resistance at $79. I don't know what else is there to say about that. This thing's kind of bouncing around on the same energy up and down. So a big trading range. Energy at the lows, when we look at the lows out here, wasn't that much lighter on the February 9th low than the February 28th low. So not much out there. We had some questions in the den and in the emails, but we'll get to those. It says, Dave, Amazon business question. You spoke about your personal shopping, went to store, didn't find what you want, turned around, went to Amazon. Do you think this is happening with many retailers reporting shockingly falling sales? Do you envision Amazon sales actually accelerating from already a very fast growth rate? And I have to say that, in fact, I got a package laying here on the floor that I ordered yesterday and paid a whole $4 to get it delivered in one day. It is tough for me to actually see or identify a real move out here that Amazon's made, that maybe the money's already in there. I don't know if Amazon's going to make that much more money, but I certainly think that as these companies try to cut costs, they will cut inventory and try to raise turns. That means that they continually have less and less, and they sell just the stuff that they make the big money on. The problem is they need to do just the opposite. There is a thing called a loss leader, and I don't see many of those anymore in stores. Best Buy, probably the last company to really do it, where they'll sell something. In fact, this is one of the things I needed. I needed a little memory stick, and that came in today along with the package on the floor. But how can you be Best Buy and not have memory chips and have them at least in depth? If the one thing you're going to have that. But like I said, everybody wants to cut, especially in the summertime, wants to cut inventories down to the bone, and it is problematic because you go in there, they don't have it. You can get it tomorrow, or you can order it through Best Buy and have it next Monday. It just does not make a great deal of sense to me, especially if you specialize in a brand or a segment of retail. You got to have that kind of stuff. And why it may hurt briefly, losing me as a customer and basically going to Amazon first continues to be a big problem. And I think he's right. I think that you could see some acceleration into Amazon, but I think you just see, my experience is Best Buy. So I think you see a problem with maybe Best Buy, especially losing a lot more technology sales for people that are probably tech savvy as I do, know exactly what they want, come in there, I need it today. Well, 2 days from now or 3 days from now is not an option. I can get it tomorrow for $4 premium and about the same price with the next day shipping as what Best Buy wanted. I needed it then, not really today as much as something else. So I think it's an issue. It is a case to be made, but I don't know if they're going to make that much more, Amazon. But I do think you continue to think that we're going to see companies like Best Buy have problems, and maybe other mall stores too. Let's take a quick look at this when we come back. BPY. Asymmetrical triangle on this thing. Got to keep an eye on it. We'll be back in a minute. Oh, that's it. We're done. I'm out of here. So when you can, not when you have to. We'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.